Hi, Goshen, Michael, welcome. We're gonna get started. Alrighty, so hi, welcome, Goshen. Alrighty, let's get right with it. So today's is the daily U.S. pre-market analysis. Real quick, let's get so the information, context, opinions which are expressed in the presentation and on the following slides are solely those of the presenter and not necessarily those of Vantage, and are solely used for educational purposes, as they do not constitute investment advice and or consultation on how a client should trade. Vantage does not guarantee the accuracy or reliability of the information provided herein. All right, so with that being said, let's get right with things for today. Real quick, who am I? I'm Gio Benacore, your host, Senior VIP Market Analyst, Market Educator, and Demonstrator of Strategy with Vantage, bringing over 20 years of experience with commodities trading. What are we going to be looking at today? Economic calendar, what's moving the markets, identifying key support resistance levels, and trading with Fibonacci tools. About Vantage, real quick, we offer instruments over 1,000 plus, over 100 plus short patterns, over 100 plus technical indicators, and CFDs on forex indices, shares, commodities, and cryptocurrencies. What we stand for: lightning fast execution, award-winning 24-hour support, intuitive tools, and global connectivity. All right, let me stop sharing here real quick. Hold on for a second. Let me just stop sharing. I'll share now my charts so we can get right with things. Hold on for a second. All right. Hopefully you're watching my charts. All right. Well, the hottest news today is going to be the hotter than expected U.S. PPI number, Producer Price Index reading, showing a 0.9% monthly and a 3.3% annual increase, both well above consensus. Now, there are key implications for financial markets and actionable CFD trading strategies for the assets that we follow. So, a quick macro backdrop. A hot PPI means inflation at the wholesale level is accelerating, raising the odds that the Federal Reserve will delay or even rethink planned interest rate cuts. This is generally bearish for risk assets as stocks, crypto, metals, and is bullish for the US dollar, and mixed for commodities depending on their inflation role and demand supply and fundamentals. So looking at this for today, we're gonna be seeing high volatilities. So the futures markets were down on pre-market on the hot PPI reading. A stubborn inflation undermines hopes for the Fed easing. So a strategy for today, short term, looking at the indices, consider intraday short selling on rallies, since further rate cuts hopes are damped and the inflation surprise can spur more downside. So tighten stops due to volatility. So in regards to, let's take a look at a daily chart here. So we had yesterday a strong momentum to the upside, floating above 24,000, and we were talking about, are they gonna hold that value? And we closed below it, and the momentum continued today. So as that being said, support and resistance are going to be quite different today. So resistance initially, well, let's use the top Bollinger Band, okay, as a possible level of resistance, and then yesterday's swing high. That's going to be our levels of resistance. As far as support, well, we can't really use yesterday's low because we already have surpassed it. So what we can look is at previous levels of resistance are now supported. So this levels around here could be that level initially, and then my second level of support, I'm just gonna use a wider range and then use this swing lows from this wicks on this daily chart. So that's for the Nasdaq. Let's take a look at the S&P and see where we could probably be going in this scenario. All right, so as far as resistance goes, well, I mean, let's use that value, the upper Bollinger Band, and yesterday's swing high, because I don't think we're gonna have much momentum to the upside today. So I'm gonna leave that level that we have for support. Basically, yesterday's level of support, I'm gonna leave them as they are. Dow Jones Industrial, we had penetrated both levels of resistance. So let's see what's gonna happen here. And then as far as resistance, I'm gonna use psychological value 45,100, and then the upper Bollinger Band, which I doubt we're gonna get there. So as far as support goes, today's swing low, I'm gonna use 4750. Let me see, 4750-ish, right around there, and then the 20 moving average, or the medium of the Bollinger Band. So that's for our indices. So the tactical bias is going to be bearish to neutral. So scalp quick moves and be prepared for high volatility when we open, because those were pretty strong numbers. Let's take a look at WTI. So for WTI, energy commodities often rise with inflation, but the bigger picture sees oil as both an inflation gauge and a potential target if tighter monetary policy weakens demand. So the strategy could be a momentum trade. If risk off continues, oil might drop as traders anticipate slower demand. Entering short positions favor below 80, right? Now this oil drop could be just a continuation of that move. So looking at 61, perhaps that would be the move. Let me just take off this trending line, and I'm gonna use just the open and the close of these two candles of a previous move and leave the same levels of support. So let's see if crude oil today will rally. Actually, that's the speculation for today. Actually, I'm gonna raise my level of resistance, hit that, and hit that one. So that's the bias for crude oil, leaving the same levels, looking perhaps for a trade higher in the energy because of these numbers. Now, nat gas, and the gas pricing is very regional driven, but demand can drop with risk of moves and economic slowdown fears. But overall, the nat gas market is going to start seeing a drop in demand because of change in weather in the United States. So we could probably continue to see a push lower on prices of nat gas. So I'm going to create a pretty wide range here for support. So 270 being support, and I'm going to leave yesterday's level of resistance. I think this is going to actually go south. As far as the metals, well, gold, higher inflation should help gold as an inflation hedge, but rising rates and a stronger US dollar usually pressure the metals. So the strategy for today could be fade short gold and silver strength on the hot PPI. So, and we want to be looking at the if the US dollar continues to move higher, breaks above 98, that will bring more pressure to the metal, and we could probably see a fluctuation lower to 33.20. So, being said that, I'm gonna actually do 33.20, leaving the same levels. I'm gonna leave the first 33.80, and the second one 33.90. We have a pretty wide movement now that this is coming out. These numbers are coming out. So silver, well, this fluctuation today took silver to above our level of resistance. I'm gonna use that swing high, $39 is still a level. I'm gonna leave Tuesday's swing low as a possible level of support, and then yesterday's opening as our first level of support. So looking to sell the metals. Copper, sensitive to global growth, rising inflation, rate hike fears is a very short-term setup, as we saw, during the number reading. So today's swing low, that's going to be our first level of support, and then 440 second. So then we have 445 first level of resistance, and 452.52 our second one. Then we have Bitcoin. After making a new all-time high, it has retraced because obviously Bitcoin, the PPI-driven rate and volatility shocks tend to hurt risk assets, including Bitcoin, due to the reduced liquidity and higher opportunity cost. So consider short-term shorts on Bitcoin if it breaks below key sharp support levels. So it has penetrated 120,000. So 116 we're gonna bring that puppy down. Will that continue to push lower Bitcoin after this number? Let's see. And then the medium is gonna be our first level of support. Resistance, we need to widen that range because of that particular wild move. So 126, I doubt we'll reach that, but let's see if it's just gonna be, sideways trading in that scenario. Then we have the euro US dollar. So the on the currencies, obviously how PPI underpins the US dollar as traders lower odds of imminent Fed rate cuts. So bias short for both pairs, for the euro and the pound, as dollar strength is likely on rate expectations. So sell breakouts below key support levels. All right. So let's use the 20-day moving average of the medium of the Bollinger Band as a first level, and then 116 psychological value of that. And I'm gonna use yesterday's swing high as my first level of resistance, and then 117.5 as my second level of resistance for the euro. Pound, let's take a look at 135 being psychological value, and then 50-day moving average, which sits above the 20-day moving average or the medium of the Bollinger Band. 136 is for today's resistance. I'm going to bring down the second level for the upper Bollinger Band. So again, look for a continuation to the downside. Now the dollar index is going to have a lot to say if it's going to continue to appreciate. I'm going to actually bring a bit more. I'm going to use the moving averages, which is since they are already above the market, and I'm going to leave the same levels of support. And looking for a continuation to the upside. This is an engulfing candle. It has engulfed just as movement. So that's a pretty strong move. Let's see how is it going to behave. So let's go back now to our charts and go down to 1 hour and see how is it that we are going to take a look at trading this markets today. Let's see. Let's take a look at this chart. All right. So this is the PPI number. A strong move to the downside after that reading, that hot reading. Okay. Volume, the RSI obviously pushing lower towards the oversold territory. Volume is still being pinned down, so we don't have that much participation of traders just yet. obviously the changing of a trading session, we'll see that decline. But once in 15 minutes, once we open, we should see a spike or a continuation of this drop, because obviously this number again is going to put more pressure on the Fed to not cut its rates. So Trump is gonna most likely blow out a gasket when the Fed decides not to cut rates in September, and that meeting will be on 16th and 17th of September. So let's see what will happen by then. So again, move to the downside is what is being contemplated. So initial targets 23,800 in this obviously hourly candle. We see that strong move to the downside. Let's take a look at 5 minutes and see what else we see. This is basically creating a coffin of congestion consolidation, obviously. Okay, so a breakout or a breakdown is what we expect out of this, and because of the PPI reading, again, a breakdown is what will be is a consensus. Now we could be wrong, but let's see. So if it's a breakdown, our targets will be obviously our levels of support that we have here, but also psychological values. You want to keep that in mind. If we do have a pull lower retracement on this candle, well, our target is going to be initially that swing low so far on this time frame. That's the low that is created. So that should be revisited. Once that's taken out, or once we hit that, obviously then we have the lower Bollinger Band, then our levels of support, values of psychological values. All right. So today again is going to be looking as one of those days that we're going to be seeing a lot of volatility, high volatility, looking for downside moves. Okay, you're looking to do some scalping, real quick scalping on some of these assets. So again, the indices are the ones that are indices. The metals, crypto are the ones that are more the highest risk in that scenario is. So also take a look at the dollar index. Let's take a look at other assets and see where we are at in this particular scenario. Everything is calm. We're waiting for the US to open. We see more of a recovery on the Dow, but this is just getting set for I think another leg down. All right, so crude oil is the one that is giving us a possible trade, since we understand that crude oil, even though is a PPI is a inflationary gauge, and crude oil it has that hedge of an inflation hedge and a potential target if tighter monetary policy weakens demand. But we're seeing actually a recovery on that. We are in the overbought territory so far. So in this 5 minutes candle, had we taken a trade, obviously we'd be looking for a move higher, and it's continued to move pretty strongly. The volume column is continuing to rise. So right now, if you enter it, you'll be chasing the market. There's no setup here, rather than just buying the market. And if you're that aggressive, well, at least your target, you could understand your target could be 63.80 initially. So depending on how many lots you take the trade with, you see that. But obviously you'll be chasing the market. So we want to be able to wait and see where this candle closes, okay? And in that scenario, well, perhaps continue to move higher. Let's see how much movement to the upside is gonna be seen. Are we gonna get to 63.80 initially? And I doubt it. In this candle is not. That's finished. All right. So in this candle, we open gap up. That's a indication of a strong momentum to the upside. So it hasn't been closed, but hey, that would have been your entry right there. 63.80 is a target. So how long will it take us to reach 63.80, or at least our initial level of resistance? within this candle that has opened gap up. It could come down and close it and continue to move lower, but it hasn't. It didn't. It hit our target of 63.80, and the next obviously up, and it hit our initial first level of resistance. So in this scenario, are we going to be able to see something like this? Market fluctuating a bit higher, peaking its head above that, doing a throwback to what now would be a support, and from here a reversal to the upside. So we're seeing that momentum to the upside being built. That pushback, that pullback that we saw that one, that's the throwback. So the market has thrown it back to the support, and it should now just continue moving higher. Next target, 63.90 psychological values. Okay, we are in the overbought territory in this particular time frame. So if continuation to the upside can be obviously faded out, profit taking also, that's another scenario that we face. So let's see how much higher in this time frame are we going to be able to see the market trade. The momentum is there. Okay, we want to be able to see. Okay, so volume has hit 63.20. We want to see volume coming higher and higher, at least to surpass this previous candle. All right, so we're moving higher. 63.90 is our next target. Are we gonna be able to reach that in this candle? Obviously, we could see another parabolic movement like this one, right? But it seems to be that it's retracing. Profit taking isn't in effect. Let's see if it comes down to close the candle, to close this little tiny gap, and then continues to move to upward, or has it lost wind and now is going to turn into red? Well, there's a lot of momentum in this candle, so it turned red. Gap has been closed. Now fluctuation to the downside. If you were to contemplate a trade, well, we have the upper Bollinger Band as a possible level of support, dynamic support. So if it does come down towards this place, you want to take a look. You want to be, observing if the market will reverse off this level when the market reaches it, or is the market already done its retracement and is going to continue to move higher? So how much of a retracement can we speculate from this market? Well, let's measure its previous move, right? So can we see a retracement into our Fibonacci values, 2360, or has the market already just reversed and is now going to continue its trajectory upward? RSI is in overbought territory, so keep that in mind. Okay, so we're looking for a trade setup in this time frame. 40 seconds left on this candle. Okay, so the market has fluctuated to the upside. It did pick its head above our level of resistance. It then turned into support. It did do a throw back to the support then, but now it is looking for more participants, and I think this is just profit taking. Okay, if we do happen to see a retracement, and let's see if we do have a trend to the uptrend. Initially 38.20% will be where the market should find that support and then reverse. So let's see, in this target, market has actually opened gap down, so momentum to the downside is what is being built. So we are at that value. Let's see if we'll be able to retrace, to rebound from here, or is it going to continue to do a deeper retracement to the golden ratio, 0.618%, or into the 50s. A lot of people take a trade around the 50s. So if you do take a trade in any of these yellow zones, your target is that upper yellow zone of negative 6180. So initially the market is retracing. RSI is falling back into neutral, but look at how little volume we have on this candle, right? And it moved, it opened gap down, but the volume is quite low. Okay, so this could be just profit taken from this momentum to the upside again. So bouncing off around the 50 marker. Now we into the green. The gap has been closed, but we're waiting for that momentum to the upside to continue. We want to be able to capture the movement from red to green and see how much higher the column rises from volume, because that's an implication, obviously, of participants coming in, buyers coming in, right? Because that's what support is all about. Support is about buyers being able to identify how many buyers are coming into the asset. So we basically, in that, now it turned green. We need volume to jump, even though the candle did just jumped, but we want to be able to see the volume continue to rise, do a strong move to the upside. Okay, so we're in the green. So if you have taken a trade, are you able to sustain that trade all the way towards this level? Obviously, if the market moves towards that direction, you'll sustain your trade, right? So let's see how much momentum to the upside are we going to be able to see from this pullback after making that move higher, reaching our initial target of a resistance. That's why we have resistance, because of those are targets. And support, if the market is trending lower, well, that's our target. If the market is falling, our target are the support. That's why we identify them. So let's see, this is basically a doji so far. We're still in this trade. We're still in this trade, and see how much higher is it. Okay, so you just turned red, but we're still within range, though. We're still within range. So it's a strong momentum to the upside being built here. Let's leave this here and go take a look at gold and see how gold is doing. All right, so gold is doing fluctuation to the downside. See how dollar index is doing. 90. Okay, so it's hitting 98, right on top of the Bollinger Band. Right now, it's just kind of retracing, so it's holding off. Let's take a look at how much gold will recover. So we have 50 seconds, 45 seconds left on this candle. We are below on the lower Bollinger Band. That acts as a resistance. Okay, so dollar index is moving higher, putting pressure on gold. We see that momentum split, so sell off, target this initial low. If that is going to be a sustain. So look at the volume. We still have 3 seconds, and that kind of is closed. Market is open. Okay, so momentum to the downside is being built for gold because of dollar index is putting pressure on that. Let's take a look at how the indices are fluctuating. All right, so we actually have a breakout on the indices. So we have broken out of the indices. We want 15 minutes for the dust to settle. on now that we have open. Okay, let's see if we are able to recover all of this parabolic movement to the downside. If you're bullish, your targets are psychological. Your moving averages are your targets as well. Okay, RSI is below 50, so momentum to the downside is still pinning down the momentum buyers. That's for the Nasdaq. Let's take a look at the S&P. The S&P sort of kind of like broke out to the upside, but it's not within the range really. All right, so the Dow is giving us more of a breakdown. So here it goes. So scalping, again, today we're gonna be looking at doing some scalping scenarios, because we're gonna see this whipsaw movements. So you gotta keep in mind that the reading of today's PPI number, it was hotter than expected, and this is gonna obviously be throwing all of that uncertainty to the Fed. What is it gonna do? Is it gonna be able to now look at a reversing? Will the delay or even rethink its planned interest rate cuts? It's a hot number. So momentum to the downside is obviously what we are expecting on the indices. And then here we have our trade on crude oil. It is continuing to sustain itself. We're looking at giving us a possible momentum to the upside. So again, if you took your trade in this yellow area, your target is that yellow line that we see here. Obviously, we could probably see a deeper correction into this, but we are making lower highs, but almost equal lows. So we created a range. How much push to the downside are we gonna see on this level, with this candle bouncing off the upper Bollinger Band? So we do have volatility being expanded. Okay, so let's leave that there. Let's take a look at nat gas. All right, so nat gas actually is moving higher. 280 has most likely been reached. RSI is farther away from entering overbought, so this could be a trade. Upper Bollinger Band, a reversal, a pullback towards the band could be an entry, and like for example there, that could have been an entry, and move your target 281. RSI still farther away from that level. We actually pulled back strongly into the band. So let's see what happens. Let's take a look at gold. So gold whipsaw. You see those whipsaw movements. So today is really neutral scenario for today trading, because of this number. It just creates a lot of volatility. Look for example, silver. Silver just made a parabolic movement to the upside, and it's trending higher and higher in this 5 minutes, right? 5 minute candlestick. Then we have copper. You see those whipsaw movements? They're just too wide, too unpredictable. Bitcoin, after making 124,000, it retraced deeply, and now it's holding around 118. The currencies, the euro pushing lower, 116. Open gap down on that candle here. Open gap up a bit. Let's see if we see a movement to the upside. The pound and this 5 minute is just consolidating, just waiting for catalyst to move higher. If we do take a trade, target is the opening of this previous candle, 135.50. And dollar index is retracing, almost hitting 98, but it's pulling back now. So let's see if it'll be able to do another swing low like it did in this past two candles, and then obviously reverse that. And it has so far. Would it penetrate that, or will it rebound from here? And basically, nope, it did make a deeper move. So this move to the downside, which we should see and push to the upside on gold, on currency, and the metals. We have silver making the double top with some wicks. Copper pushing lower. And look at that. Such a strong move to the upside in that particular candle. Bitcoin waiting to make a breakout. Back up to at 119. Euro breaking out. The momentum to the downside of the dollar index is helping out again. So 135.50. Let's see. Well, we want to be able to see dollar index continue to push lower into this level. We found support around this level. Let's go back to the Nasdaq. So the Nasdaq parabolic movement, momentum to the upside, recovery mode. Oh, that's a nice move to the upside. Catching a bid, so you moving average are your targets. Same wise, moving average are your targets. All right, so crude oil has retraced, so this trade is done. I mean, you could still wait and see if the golden ratio will be the place where it reverses, but perhaps it won't be. If we could probably continue to just push lower and lower and lower. I mean, it's hitting the 50 marker, so let's see what will happen. Let's see, we still have 2 minutes in this candle. Market is pushing lower. It hit that 61.80, that golden ratio. If it's going to reverse, it'll reverse here now. If not, most likely it's going to continue to push lower and just reverse this entire parabolic movement. So it's taking it 20 minutes to retrace what it did in 5. Okay, so that could also tell you that there is support. There are buyers still around holding on to this price fluctuation. So that would have been a scalp movement trade. No reversal, bouncing off of the golden ratio. So buying at 63.56, selling at 63.63. Now it's in the green. Let's see how much movement to the upside will that have. Okay, so it changed into green. Momentum to the upside being built. We want this volume to come up to 63 for us to see that it has done a nice strong recovery. So it bounced off the golden ratio. You see how those levels work? For some reason they work, and they've been working, for years. So that's the golden proportion. That was a scalp movement to the upside real quick there. We're still in time in this candle. Let's see where it closes. We got 14 seconds left on this candle. Is it gonna be able to close in the green and then open up, gap up, and just continue to climb up the ladder to meet the close of this particular candle? And this candle is retracing that movement, profit taken. That could be the case. Let's take a look at nat gas. All right, so nat gas bouncing off the upper Bollinger Band, retracing. Gold in this particular scenario, well, gold was making, or is making so far, a particular ascending triangle. So will it break to the upside, or will it break to the downside? Previous move was to the downside, but we do have an ascending triangle. So if you do take the trade to the upside, is this gonna be our target? The 20 initial targets, if it does break out to the upside, you gotta wait for the breakout. 33.50 moving average, 33.51 and change. Moving average, 33.52 and change. And then obviously the top of this line, which is the opening of this ascending triangle. Okay, so we have broken out. Let's see if the momentum is strong enough for it to hit our first target, 33.50. In this scenario, we want to be able to see the dollar index this fall, 0.200, 0.100, and hopefully you see it negative. That means it has retraced a whole lot, and that'll obviously help dollar index. So here in the momentum to the upside, 33.50, we're still waiting for that particular level. We still have 2 minutes and 50 cents left on this candle, and we're moving. Our trajectory seems to be strong. Momentum, volume is incrementing. RSI looking to reach 50. But let's see, it's still battling. But we do see that the change is it was going lower. Okay, so it's found some resistance. Sellers holding on here. And this, we still have 2 minutes on this candle though. And this candle has had a high of 33.49.42. So we kissed our initial target, 33.50. We were shy by 58. Ooh, strong red candle. So will it now break to the downside? Well, grab that line, and that's your target, 33.41. It's gonna happen. It's gonna do one of the two things. Is either gonna break to the outside, do a breakout, or break down. So let's just clone this line and do it here. So we still have a minute left on this candle, and we're still looking for initial target of 33.50. And if it breaks to the downside, your target will be obviously this swing low, 33.45, then the previous low, 33.44, and then obviously we have 33.44, 33.42, and the low of this line here. It could also just stay here and just idle sideways and stay within this formation that we have so far. I mean, we are about to be 15 minutes into the session, so let's see what will happen. Yeah, Goshen. Yeah. So let's see what will happen. Let's see if today will be one of those red days across the board, because there is a lot of volatility obviously applied because of the PPI. So we have the the initial 15 minutes, let's take a look at the assets where they are. So we see that the Nasdaq is trying to climb back up, trying to recover what it just took out. It just took out on one candle. That was a pretty strong move to the downside. 132 pips. That would have been a great trade. I think everybody would have been okay. That's it for me today. But how obviously you want to be able to be in the know-how. So you saw the number coming out. It was harder than expected, and then harder than expected mean red. So what you saw was red, right? That's what you saw. Now a recovery into so far into the half of this candle. Here's another thing for you to keep in mind. When you see this strong movement to the downside or pretty strong candles, you want to measure eyeball with the middle part of it, and that's usually where the market will fluctuate towards, and see if it has enough momentum behind it to continue its other half trajectory. And you see that how the market around that level has found resistance, and it's finding resistance right now. But that doesn't mean it's not gonna obviously move higher. It is bouncing off the 20-day moving average, which gives it support, but it's pinned on the 50, between the 20 and the 50. So it is moving higher. Let's see if it'll be able to sustain a move past the 50 moving average. Dow is just whipsaw. You see that? Just that's great. That's great for scalping. All right, so crude oil. All right, so this trade is done. Crude oil is looking to retrace all of this movement back down. Nat gas is making a symmetrical triangle. So basically lower highs and higher lows. This is 50-50, like I said, in today's market environment, because of the PPI. So it could break out. It could break down. But if you see it turning red, that this gap has been closed. So that momentum that it took for it to go down, to come down here and rebound from here, it could help it break out. But again, it is just gathering strength to find a direction. And if you decide to take a trade when it breaks out, 280 is your initial target, and if you do decide to go lower, well, the entry will be obviously if it does a pullback towards the opening. So you have all. Let's say, for example, you take a trade at the opening of the closing of this candle. Sorry, where I'm at. So 2.793. Then your target would be that low line. That line. That's one way to see it. All right, so we actually broke down on gold. All right, so this line could be gone. Let's take this out. Take this out. All right, so we broke down out of this particular ascending triangle, but we're still in it. So let's just, again, today's just very volatile days. A lot of whipsaws. So look at this. Silver within inside the Bollinger Band, rebounding off nearly the 50-day moving average. It picked its head below the lower Bollinger Band. So if this momentum is incrementing, we want to be able to see if it picks up again outside of the lower Bollinger Band, then we could continue selling that off towards the 38 value, or initially 38,100 in silver. Copper, we've seen the momentum to the downside, target 443. Bitcoin is just idling above 118, 118 giving it support, so it's being respected. Or could we see a pop to the upside? If we do, your 20-day moving average or the medium is the target. Currencies, the euro is making lower highs and lower lows, just consolidation and then a movement. So here, if it does break down, target will be lower Bollinger Band. The pound is also doing the same scenario. Dollar index is just so 98 psychological resistance for the dollar index. If it does put to above 98, we most likely will continue to see appreciation of the dollar index. We need to put it to close above 98, and that'll put pressure obviously on the metals. Let's go back to so it's broken out, and it finally recovered all of this move to the downside. The Nasdaq. So will it close? Will it come to look for 24,000? RSI is still outside of the overbought territory. So expect some resistance right around this level, previous level of resistance. The S&P still has some time for it to reach or to recover all of that drop, that candle. Dow, more sideways choppiness on the Dow. Crude oil, so the 20 moving average, but the medium is being met. Market rebounded off of it. Look at, you see it? It rebounded it. Just reversal of that medium. Nat gas. So nat gas broke out of this symmetrical triangle. Will that be your target? So initially it was 280, was met. Market retraced from that. Next target will be the upper Bollinger Band if it does continue to move higher. Gold. All right, so this just shows me, is giving me an indication of a dead cat bounce, right? And so the trajectory should be, not that it must be, it could be, continue to push lower. So let's see if it has to be the case. It has created a bottom so far around the 344 in changes. So would it make a breakdown, or will this be the place where it has found a bid and rebound to the upside? Target 33.50 or the medium. All right, so silver is actually on the move to the downside. It's taking out this previous low, so 38.05. Copper, the same scenario, moving lower, entering that downtrend internally, 443. Bitcoin finally doing some moves to the upside. Well, if it can be sustained, we want to be able to see that it reaches this particular level above the 20 moving average. That scenario. The currencies, 160.5 seems to be the place where it found support, and the pound is just entering again consolidation. Perhaps it'll do another leg lower, and we want to see dollar index obviously move higher. All right, let's do one last run for the indices. So there we found resistance around that level that we spoke about. basically the high of that candle. 50-day moving average seems to be applying some support for the market. Is this just profit taking? It is part of it, but let's see if it'll rebound and just trade again towards that previous high. So if you do decide to take a trade around the 50 moving average, and that's your target to the previous high. Also for the S&P, let's see what will happen. And then we have the Dow just sideways trading here. Crude oil, that bounce off the 20-day moving average with medium, is holding water. So let's see if it's ready to make another leg higher to again meet our level of resistance. All right, so not gas, it opened gap up. Momentum is being built. RSI still far away from entering overbought territory. So I mean, if you had entered it, you could hold on to it and see if it reaches our target, which is basically the opening of this ascending triangle. 281 could be your initial target. The upper boundary band could be another target. Your own greed is your other target. So now this could just drop and close that gap, and then just find more sellers, and then just bring that fluctuation down to 280. That could be another scenario. Okay, so let's see what will happen if this candle is going to close that little gap, and it did. So how much of a retracement, of a pullback, is it going to do? All right, so 280, 2.80 psychological level of support, and see if it'll be able to reverse its trajectory from that level, or if not even going to come towards it and then just decide to continue to move higher. Or you could just continue to just pass the 280 and continue even lower, right? So things can happen, a lot of things. So in this case, it has penetrated to 80, and will it continue to move lower? More sellers coming in. That's probably the case. It's continuing to move lower and lower. And if it does retraces, if it does engulf this entire candle, that's an indication that the market will reverse. Will likely reverse. We don't have a crystal ball to see what's happening, right? But if it does engulf this previous candle, this red candle drops even more and engulfs the body of it, then that's an indication of a reversal in trend. Intraday trend in this time frame of 5 minutes was higher. We did a breakout of the symmetrical triangle. The high of this candle was 2.805, right? So let's see what will happen. We still have 50 seconds left on this candle, 50 seconds left on the session for today. All right, I hope you liked it. All right, I hope you liked the session for today. And then every single day from Monday to Friday, we do this session 30 minutes prior to the US session, trading session. We talk about 12 assets, the ones you see on a target on my chart, and it's from Monday to Friday. Hope you enjoy it. Hope you learn something from me. And every single day, we'll have something more new to talk about. Next week, I'm gonna do a short webinar on the VWAP on Monday. So stay tuned for that. How we can use the VWAP, which is the volume weighted average price, to trade. All right, that's it for me today. Thank you for watching, and I'll see you tomorrow at 8 o'clock. Bye now.